Welcome to Ito Analytics, the leading platform for providing volatility data and option analytics. This is Chapter 5 of Option Trading Tutorial Series. We will cover advanced vol surface analytics in this chapter. First one is option implied daily moves. At the money, implied vol represents the average daily movement of underlying during the tenor of option. For example, 20% implied vol for in 1 month that the money option translates to average 1% up or down daily movements for upcoming 1 month. This is the graph for expected daily move on NVIDIA for upcoming 30 days. 1 week option on NVIDIA has implied vol of 34%. This translates to roughly average 1.7% daily movements, either up or down, for upcoming 1 week. What's really interesting here is short-dated implied vol is always elevated ahead of key events such as earning release. With some calculations, we can back out the implied movement of the key event. For example, Adobe will have earnings release on 11th of Dec 24, which is 7 business days later. 1 week at the money implied vol is at 25% and 2 week at the money implied vol is at 54%. By comparing these two different tenor implied vol, we can back out the expected earnings move is around 7.7%. Estimation of underlying movement ahead of key event is important. It allows market participants to perform strategic planning ahead of events. On the other hand, option traders can bet against the earnings movement, which we will cover in detail in later chapter. Next feature of vol surface is implied return distribution. Vol surface captures all the option prices across different tenor and strikes. By looking at option prices across strikes for a given tenor, we can back out the implied return distribution for that tenor. This graph shows the implied return distribution for SPX calculated from 1 year vol surface of SPX. Option market is implying 71% probability for SPX to move higher and 29% probability to move lower. Detailed probability distribution is shown in the graph. Looking at implied distribution from vol surface helps traders to understand market expectation of the underlying. As rule of thumb, high volatility names have distribution skewed to downside, with flat tail on the upside. This is implied return distribution of Coinbase, one of the very high volatility stock. We can clearly see the downside skewed distribution with flat tail on upside. This phenomenon is due to high volatility names usually associate with higher risks, but with potentially high return. On the other hand, low volatility names usually have return distribution skewed to upside, but with flat tail on downside. This is implied distribution of SPX, which is one of the most low volatility and stable equity underlines. We can clearly see the upside skewed distribution with flat tail on the downside. This phenomenon is due to low volatility names usually associate with stable upside return, but with some probabilities for big drawdown. The last feature we would like to cover is vol surface skew. Recall from Chapter 4, unbalanced supply and demand on call versus put led to existence of vol surface skew. Therefore, by looking at vol surface skews change over time, we can estimate the supply and demand on upside and downside options and understand the current market sentiment. This is the temporal graph showing SPX 1-month vol surface skews change over 1 year period. On 5th of Nov 24, ahead of 2024 US presidential election, 1-month skew was close to year high level. And right after the election, skew came down dramatically and back to normal range. Vol surface skew is one of most useful indicators for estimating market sentiment. It is a strong signal for traders to time the market. Elevated skew translates to distressed market, and cheap skew translates to overconfident market. More importantly, understanding skew allows traders to formulate option strategies. We will cover this topic in detail in later chapter. This is the end of Chapter 5. To access volatility data and visualizations illustrated in this tutorial, visit Ito Analytics website and subscribe to our Patreon.